we can see that there were the most purchases and sales at specific prices. It's a real fact, Vikis, that there was increased interest in a specific place for you. So you can take a look. This is where I had a pause. From here, we saw a good upward movement. And again, the price comes back to this level. Take a look. Let's imagine that no, we have news right now. There's just none, right? And it comes here, and we see that interest is increasing compared to the interest that was at that moment. This might reveal to you that there are some large orders here, that there's a major player and what kind of pullback movement they can make. But all of this should work with the overall logic and definitely with candlestick analysis, not just on its own. So again, this really shows you that there's some interest here. What indicator, what else do I use? I also use clusters. What do I need a cluster for? To read each candle. So here I'm looking at what's happening with specific price points. I can correlate these price points with some main level. Here I'm looking at what's happening in this particular candle. So there's interest. Interest is increasing or interest is decreasing. If this is happening at a level, your volume is increasing. At the level, I can assume that there's a player who can make some kind of movement. And this cluster shows you exactly what was happening in each candle. By which, well, I'll take this spot, this candle here. Let's zoom in a bit. Here. The area of interest is located. At this moment, we see just a bit below the closing of the candle. So specifically, should these prices, the sellers won. So the sellers were selling, but the seller didn't have enough volume. In the end, the buyer closed the body above this seller. So he was able to get through this area of interest and close the body above. So the volume that the seller demonstrated, the buyer surpassed it and won. Not a strong enough seller. So it specifically tells you what's happening in your candle. I'll say it again. These indicators are tick indicators. A study was conducted showing that tick volumes really work and reflect the approximate interest in real volumes. I often get criticized for saying that these tick volumes ticks don't carry any information or money. Guys, okay, let's say I'm absolutely nobody. There are platforms, there are brokers, there are liquidity providers who have been doing this their whole lives. Let's read an article now. So, looking at this screenshot, let's see what we have here. Below is a screenshot of the hourly charts from the MetaTrader 4 terminal, the euro to dollar market. The data is provided to brokers. The futures market, meaning the data from the SME exchange. So, the most accurate volumes in Forex are the volumes from futures. The simplest chart on TradingView, for example, it doesn't make any difference at all. So what do we see here? On the same futures, we see that at this moment, there's a spike in volumes. So the volume is increasing compared to the previous one. So if there's interest here, then suddenly, bam, the interest becomes greater. Let's see what's happening at this moment too. What's happening with us? Suddenly, the volume increases. So we can see that there's activity specifically in this spot. Let's look at the next impulse that we have. This is a candle, a big candle, this green one. This impulse is happening on this candle. Here it is, look, the volume of the previous volume. That is, we see that on this candle, something is happening. On this candle, the interest is significantly increasing. Let's add another area here if this is happening at the level. What do we get? The emergence most likely of the other side. Does the futures now reflect the volume? It reflects. Does the tick volume reflect the interest in emergence compared to previous spots? It reflects. So guys, if you hear such nonsense about volumes, you can just ignore those traders altogether because those guys will never make money in the market on their own. Affiliate programs, selling entries, enclosed channels, signal bots. You're sending me a cut of the profits from each profitable trade, like a certain percentage. And these are all the people who make money on anything but trading. The main thing to remember in trading is that price is interested in liquidity. And what is liquidity? It's money. So Petya can buy, for example, 10,000 lots at that price. We need to find these lots on the chart. And to find these lots, we need to take someone out. For these lots to appear, they need to be available so that Petya can buy 10,000 lots from the market. Liquidity, it has accumulated at the top. Liquidity, we are going to take liquidity from the top. It has accumulated at the bottom. We haven't taken it for a long time. We are going to take liquidity from the bottom. To know that something interesting is happening in one place or another, we can refer to what? To the volume, because it's these bars that express the market's activity. That's it. I've spent a lot of time on volumes. You can believe in an endless amount of time, and all of you who are watching me are a small number of people. At least you'll know this information, and that's already good. And now let me look for some situations. Situations, I'll say right away, there will only be most of them. Okay, I won't say only. Most of the situations I would like to close from today's session on a pullback. If there are clear facts for entering on a continuation, that can also be taken into account.